Dickey, coming with my update for the week. And again, my son's going to get on me about this, but I like my Excel spreadsheets, so sorry. Here's what I've looking at and what I'm keeping track of on a macro basis if you want to look at it. But basically, the day is not quite over, so the NASDAQ is up roughly year-to-date 5.6%. Now it might end up a little bit higher or lower, but for the week, just a smidge down. The S&P is down for the week, and so is the Dow. But for year-to-date, they're both up. But what I want to show on here is the trend that I'm starting to see. So over the last 12 to 18 months, again, when the NASDAQ's been down 1%, we've seen the S&P down maybe 0.5%, the Dow down 1/4, and the reverse. So if we've seen the Dow up 1, we've seen the S&P up 0.5, and the Dow or the NASDAQ up 1/4. We're starting to see that trend reversed. My opinion on this is that as people were selling off the Dow or the NASDAQ stocks, the growth stocks, they were buying into stocks that were more value oriented, which would be more centric to the Dow. So that's why you saw that trend. People were selling out of growthy stocks and buying value stocks. So that's where the dichotomy was going there. I'm starting to see a trend going back the other direction. Now, again, this is a bigger picture, but with the NASDAQ down roughly 30% and the S&P down 15 and the Dow down maybe 7-8%, what you're looking at is in order for them to, when they converge, when the Dow gets back to even, you're going to have to start seeing these kind of numbers, even when they go down, which is kind of what we saw most of this week. Even when the market was down, we saw the Dow down more than the NASDAQ and the S&P. So the idea is that when the Dow gets back to even, the S&P should be close to being back to even, as and should be the NASDAQ. There might be a small lag there, but they should be relatively close. In order for that to happen, again, you're going to have to start seeing a lot of these days going on like this. I mean, maybe it shouldn't be quite so drastic, but if that's what it has to be, it has to be. I mean, if we can continue to have, the NASDAQ up 5% and the Dow up nothing, they're going to catch up relatively quick, which is what normally happens when you're seeing a bear market reversal and you're seeing a bull market. The technology typically will lead out of a bear market. So I'm starting to see this on the numbers, and I'm starting to see some of these bigger companies lay off. So as an example, Google laid off a bunch of people this week. Microsoft laid off a bunch of people. So a lot of the large tech laid off. I don't expect that to happen with Apple. They didn't hire as many people, and they weren't as aggressive on the growth side as far as adding employees over the last several years as some of the other larger tech companies were. We've seen Amazon get rid of people. We've seen Meta. So, I mean, they're all doing what they're supposed to do, which the nice thing is down the road, that's going to make for a better profitability for these tech companies. So we might have another quarter, maybe 2, where we see some of the fallout of this. But my guess is when you see a company like a Microsoft or a Google laying off people or firing people, or however you want to look at it, but getting rid of 18,000 or 12,000 people, there's usually a couple reasons for that. The one is they're doing it because they're smart business people and it's time to downsize, and it just makes sense. The other part of it is maybe they're having a bad quarter and they're doing it for that reason. So it's very possible that next week or over the next couple of weeks, when we see Microsoft and Google report earnings, it might be a problem. They may not hit their numbers, and that's okay. We might see, some of this retracement of what we've just done here, and there's nothing to freak out about that. If it happens, it happens. We're probably going to go back to where we were a week or two ago. And again, that's okay. It might be a great opportunity to buy some of these stocks depending on how their earnings are. So keep an eye on that, and I'll give you an update on what I'm looking for next week, which again, the big one for next week is going to be Microsoft. On Monday, I'll release what I'm actually looking for as far as the individual stocks next week, but I try to keep a week or two ahead of that for you as I've updated you on this. But so this week, everything kind of went down the way we expected it to go. The market was, for the most part, flat, especially on the NASDAQ side, a little bit down. But, year to date, we haven't lost a bunch, but I don't expect the Dow to do a bunch here in the first 6 months of the year. Hopefully it won't go backwards a ton, but if it's going to kind of stay even, that would be great. I'm really expecting the majority of the load to be carried on the NASDAQ and part of the S&P. Dickey out.